Hello, everyone. Good morning, afternoon, or evening, depending where you're tuning in from. Welcome to this week's installment of DappRadar Market Movers. My name is Pedro, and today we will be diving deeper in our recently launched January Industry Report. If you're a DappRadar Pro user, you will enjoy immediate access to this report. If not, you will have to wait a bit longer. This is one of our most important reports as we analyze in depth the most important metrics and trends across the three main categories of our industry: DeFi, NFTs, and games, and try to make them more insightful and understandable to you. For the third week in a row, I have the pleasure to welcome Boris Ribo, part of our research team at DappRadar. How are you doing today, Boris?
I'm doing very well. Thank you very much.
Perfect. As always, we will be recording the session for you people to catch up later. And if you miss any of our previous shows, you can get them on our YouTube channel. So, without further ado, let's jump straight into the action. So, despite the fact that the Dapp industry took a big step forward in 2021, the crypto market is undergoing a bearish period. Due to a fact of macroeconomic events that we're not going to discuss today, but it is a fact that the bulls are not in command anymore. The most important cryptocurrencies, including Bitcoin, Ethereum, Solana, and the list can go on, were down as much as 50% from their all-time highs seen in November, and have not recovered yet. Let's remember that in November, 2 weeks after the Meta announcement, the industry looked ready to explode, but it didn't. The current situation has tarnished the market with a feeling of fear, uncertainty, and doubt. Perhaps a good moment to remember that the old saying about when a market is fearful, be greedy, and when a market is greedy, be fearful. Anyway, in contrast to the market sentiment, categories like NFTs and games are performing exemplary. The NFT market, for instance, generated a record of 16 billion in sales, although more than half originated from artificial trading. More on that later. The games category keeps building momentum as the top play-to-earn dApps continue to grow their player base, and several projects are attracting millions in investments. Meanwhile, the DeFi space showed maturity amidst the highly volatile period, and also we saw intriguing changes to the TVL leaderboard. So let's start with NFTs. Boris, you've been involved lately a lot in NFTs. So what can you tell us about this space? What's happening in NFTs?
NFTs are actually proving themselves, much like as we spoke last week, NFTs are proving themselves to be more resistant to the crash than most assets are. In contrast to the market sentiment, NFTs have performed very admirably, amassing a record sale of $16 billion in sales. Although, as previously mentioned, half of them is originated from artificial sales.
Yeah.
Sorry, hold on.
Yeah, I mean, for artificial trading, yeah, also known as wash trading, right?
Yeah, so as we can see that LooksRare has absolutely dominated the market trading and is generating volumes in excess of a factor of 2 compared to OpenSea. And as previously mentioned, a lot of this is to account to wash trading. Could you explain what exactly does that mean? I mean, how would anybody wash trade NFTs? What does people have to stand to gain from it?
Yeah, it's a very good question and an interesting one. On January 10, we woke up to the news about a new marketplace on Ethereum, LooksRare. Users that interacted with OpenSea between June and December were eligible to receive a rewards in Looks, which is the governance token of this new marketplace called LooksRare. So LooksRare was originated as a community, a marketplace thought for the community. If you transact or trade right now in OpenSea, basically you don't receive anything. That thesis is completely changed by LooksRare. So First of all, it reduces a half percentage from 2.5 from OpenSea, which is a benchmark, to only 2% in LuxRare for all the trades. So if you transact something worth $100, OpenSea will charge you 250, and in LuxRare you will only be charged for $2. So that's the first gain. But the most important part is the tokenomics around the Lux token. So if you stake your Lux in, if you're a Lux holder and you stake your Lux into the marketplace, you are eligible to receive 100% of all the trade of all the fees generated from the trades happening a certain day. This is very important. Why? Because it's basically incentivizing the activity within the marketplace and rewarding the community in the same process. So what this means is that all the fees collected from the trading activity will be distributed to the persons holding Lux. And in regards to answer your question about why wash trading or artificial, because basically it's artificial trading, are trades that are not organic. It's not that I really want to sell my NFT to another people. Why is this happening? Because the same tokenomics that Lux Rare include, they include a metric, sorry, not a metric, a mechanism where you will earn additional Lux if you trade. So let me give you an example. The more you trade, the more Lux rewards you will get. This is why we say that they are incentivizing this type of activity. And this is why it can be profitable to sell to yourself an NFT for 150 million, right? But
Mm-hmm.
why? So we know that wash trade happening in the traditional markets, and it is illegal. In the NFT space, it is not as such. However, it's not ideal at any extent to this space. But why is it happening? It's basically incentivizing the activity. Myself, if I have a collection that has no royalty fees, which I won't pay additional money for transacting, I can basically sell the NFT to myself and earn a lot of Lux rewards originated from that trade. And the higher the price is for that trade, the more Lux I will earn. So that is why we are seeing this type of artificial trading, where it is not a real NFT, where person A is selling the NFT to person B. Is person A selling the NFT to the same person A, just to a different wallet, right?
Mm-hmm.
And we're seeing quantifiable high-end sales in the order of millions. Maybe it's being sold for 150 million. Maybe it's Terraforms being sold for 80 million, which is insane. If you compare the average price of these collections in LuxRare are or the exorbitant compared to collections in other marketplaces like OpenSea or Rarible. I'm gonna give you quickly the example of Mibits. The average price of Mibits in LuxRare is around that 350,000, and compared to OpenSea, we only see value of 3,500, right? So
Yeah.
it's basically 10,000 more expensive the average trades on LuxRare rather than on OpenSea. And this is the reason why we are seeing this artificial trading, because basically users are not trying to do illegal activity, but they are trying to get more rewards in the form of Lux.
Yeah. So that basically explains the because if we look at overall trading volume in terms of raw numbers, um, OpenSea lags behind when we have around 200 million average trades throughout January. Whether if we look at LuxRare, the volumes are exorbitantly, like I said previously, by a
Yeah.
factor of two. We're going into like 400 million, reaching almost 800 million by mid-January, and it still seems to go up. Whether if we compare that to uh, actually the unique wallets that are trading in LuxRare, we essentially have less than half the wallets that are present in OpenSea.
Exactly. I mean, looking at on-chain activity on both platforms, you can easily identify how this artificial activity and explain it basically by itself. So around 535,000 unique traders were involved in OpenSea in January, and only 35,000 in LuxRare. And as you said, is like around 2,000% more unique traders in OpenSea than in LuxRare. Nevertheless, LuxRare generated almost double than OpenSea. Another on-chain metric that can clarify this is the number of trades, the number of sales that actually executed in OpenSea were over 0.47 million. And on LuxRare, we only see 33,000 sales. So the high-end sales quite inflate the numbers. But looking at these on-chain metrics, we clearly identify that this is artificial trading indeed happening in the platform. Nevertheless, probably a bit shadowed by the LuxRare numbers is the fact that the NFT market has one of its best months, if not the best month yet for the space. Excluding LuxRare, the NFT market surpassed 5.3 billion, which is just lower than the volume saw in August. However, OpenSea reached its best month yet. It surpassed 4.5 billion in sales. Also, it saw a record number of unique traders and sale. So, as you can see, there is organic growth also happening in the space, which is shadowed, of course, by the high volumes of LuxRare. But the on-chain metrics are very bullish on NFTs.
Yeah, and as we mentioned last week as well, and we're going to reiterate that point because I think it's worth mentioning once again. It's truly a well, not perplexing, but a standout achievement of NFTs is that while everything else and all the other commodities are crashing, we see a correction of Nasdaq by nearly 30%, which is echoing the woes that we had in March of 2020. We see S&P collapsing. We see record inflation numbers. And as previously mentioned, Bitcoin and Ethereum also have lost nearly 50% from their all-time highs. NFTs, however, in comparison, have decreased by most collections lower than the drop in Ethereum, and some collections have actually actively appreciated. So, as we see collections like Basie, like Doodles, and World of Women have actually appreciated during that time. And we've seen, although this trend has been happening steadily since November last year, that the overall market cap of NFTs has been slowly dropping, and since November we dropped by 15%. However, the overall Ethereum price dropped by 48%. So although there is a slight correlation there, we would have, if there was a very strong correlation, we would have expected the overall market cap to drop even further. However, that does not happen, and shows that NFTs are a lot more resistant to the fluctuations happening in the market, despite what people would expect, and shows their testament as a separate asset class that weathers the storms perhaps better than other asset classes in these turbulent times.
Yeah, I think you mentioned a very important part. A new class of assets, like NFTs are becoming sort of a new class of assets on their own.
Yeah, and perhaps this is why, I mean, celebrities are heavily involved in buying NFTs as of late. I mean, we have seen Justin Bieber bought
Bored Ape.
Bored Ape the other day. We've seen Eva Longoria buy an avatar
The World of
from
Women.
exactly. So I think this doesn't explain it doesn't explain it exactly, but I think this will have something to do with why a lot of celebrities are buying, because they are investors just like all of us, and perhaps they're making the smart move there by investing into NFTs.
Yeah, and certainly it creates the other effect, an effect the other way around, in which NFTs are actually getting appreciated because the push they are getting from celebrities. So it's a full circle, right? Like celebrities come in and they push the value of NFTs up. So basically these assets are getting appreciated, as you say.
Yeah,
And
and
another, yeah, sorry, go on.
no, go on.
I was just going to say that besides celebrities, we're also seeing big brands becoming important part of NFT adoption. Last week, it was last week or 2 weeks ago, I don't remember exactly, but Twitter just enabled the verification of your profile picture as if there are NFTs, right? So if your NFT is verified via Twitter, your profile picture will change to an hexagon instead of a circle. And in that way, you can verify your NFT. So it's not that I'm just basically copy pasting the JPEG and saying, yeah, I own a CryptoPunk. No, 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 we are seeing this type of Web3 functionalities already embedded into important social media platforms like Twitter. And the response was immediate. Instagram, Facebook, and TikTok also announced that they were going to include NFT verification and Web3 features in their platforms also. And not only social platforms, but brands like Adidas and Nike have joined the space last year. Adidas launched a new NFT collection along with Prada, the fashion brand, and also Walmart, the probably the most important retail company in America, filed for several trademarks intending to be used as NFTs in their future metaverse platform. So the adoption that we are seeing from big brands, it's also very important, along with celebrities. And yeah, I think they are helping NFTs consolidate as a new class of assets, as you mentioned.
Absolutely. I was actually going to mention the same thing, as the support that we're getting from large industries also helps NFTs become ubiquitous and pushes them to the forefront of popular culture, and in turn eases their adoption by the masses and by major institutions as a whole.
Yeah, exactly. I mean, the cultural impact that certain collections are creating, like the Bored Apes or CryptoPunks, that they were auctioned in important houses like Christie's or Sotheby's, or even certain generative art projects like art blocks, the Fidenzas and the Ringers, autoglyphs, are being already exposed in certain art collections to the public in public museums. So slowly we're seeing adoption and we are getting there, which is very bullish for NFTs. So it's a great time to be around the industry, and it's a great time to be to know NFTs. I think we're very early at this stage. Cool.
Yeah, however, NFTs are not the only thing that we're going to talk about. So you also wanted to mention how DeFi's have been doing in the time. Would you like to eliminate how the DeFi market has been doing?
Yeah, exactly. I mean, not everything is NFTs, although maybe we want to be so. Yeah, let's talk about probably what most people think it's the less entertaining part, which is DeFi, right? Um, so yeah, I mean, DeFi is probably the category that has been suffering the most from the crypto crash. And there is a very single reason. I mean, all of your assets are basically cryptocurrencies. You play with cryptocurrencies in liquidity pools, you farm tokens, you lend or borrow your tokens, and all your positions are basically in the crypto. So there's no there's no asset overexposed that can protect you from the crypto crash. There's no way to sugarcoat it. Um, so yeah, what we see in DeFi is, of course, the industry at the time of this record, the total value locked in assets in the DeFi protocols across the industry is estimated around $180 billion, which is a 23-25% decrease from the value we observed at the end of December. So similar to what we saw in NFTs, the drop in the industry's TBL, which is the most important metric in DeFi, by the way, is lower than the 50% reduction in the price of the underlying cryptocurrencies. So at some extent, we are seeing also DeFi being a little bit resistant to the crypto crash. And why is that? Because one, the industry is way more mature, right? The DeFi protocols are way more mature than they were like 2 years ago when we saw the DeFi summer. And another important aspect that is very, very positive for DeFi is how well the stable coins, and as you know, the stable coins are the cryptocurrencies that are pegged one to the US dollar. So they will always, well, they should be all the time around $1, right? To maintain the equilibrium in the DeFi ecosystem. So one very positive sign that we saw in this high volatility period is how well the stable coins, the more important stable coin, the Terra US dollar, the US dollar of Tether, Binance USD, and so on. These stable coins were able to maintain their algorithmic uniformity and keep their one-to-one ratio to the US dollar, which is a very positive sign for the DeFi going forward. And in terms of TBL, let's talk about how the blockchains behave in terms of TBL and which blockchains are still on the leaderboard. We see Ethereum is the dominant blockchain by far. Ethereum holds around 65% of the industry's TBL, a bit less dominant than what we saw in December, where it held basically two-thirds of the industry's TBL. Now it around 50, 65, sorry. Um, it holds around 113 billion, which is good. Then we have on the second position a very close battle between BSC, the Binance Smart Chain, and Terra. Terra has been increasing their value a lot, their value proposition in DeFi. And as I mentioned previously, probably UST, USDC are among the most used stable coins because of their uniformity in measuring this one-to-one pair. And an important thing that we saw is Phantom. Phantom is now the fourth blockchain in terms of total value locked, surpassing Polygon, Solana, and Avalanche, which is very nice. The highly scalable layer 1 solution almost doubled its total value locked in the last 30 days and is now above 9 billion, which is great to see. Just as a quick recap, Phantom is a layer 1 solution, as I mentioned. It has a proof of stake algorithm, so it has a high scalability. It's a very secure blockchain. So we will probably see more and more DeFi dApps being built in this ecosystem. And if you were listening to yesterday's AMA with Alpaca Finance, they even mentioned that they were probably extending their features to Phantom. So as we see, Phantom is becoming this important player in the DeFi space. So as you can see, the DeFi space is getting more competitive, more mature, and more consolidated, which is, of course, great news for the industry as a whole. Okay, so we have talked about NFTs, we have talked about DeFi, and there is one category that we still need to go through, which is games. So do you want to talk about games, Boris?
Absolutely, it's my favorite part. Now for some frivolity. Yeah, games not to be underestimated though. Games have
No.
oh yeah, they have overtaken 52% of blockchain users and are proving to be one of the most interacted dApps with on the blockchain. Um, because of their close association with NFTs, they also help drive the NFT metrics and vice versa. So
Yep.
I'd briefly like to mention of the outstanding performances that we had on some gaming dApps and what they have achieved in the last couple of months. So going from the top of the list, we've got the leader in unique active wallets is Splinterlands with 312,000 active users. Then we have Alien Worlds with 206. And trailing in the third, fourth, and fifth places, we have Axie Infinity, Farmers World, and Upland. And say, although Splinterlands is the most active game in January, they attracted over 305,000 unique active wallets, and the number increased by 4.5% from the previous month, and they just keep growing. Farmers Wolf is a gamified app that's hosted on Wax and became the third most played game in the industry, attracting over 111 users daily, unique active volumes on average. And in the last places, as previously mentioned, we have Axie Infinity and Upland. The,
Yeah.
im- the impact generated by games is quite visible in the Polygon network. The sidechain increased its usage by 78%, with the blockchain games behind the rise. Leading the way in all of this activity is Sunflower farmers farming play to earn that managed to attract over, nearly 500,000. So we're just shy at 480,000 unique active users last month. Sunflower Farmers became the most played game actually on the network and generated $2.4 million worth in transactions. And
Nice.
yeah, and lastly, I'd like to talk shortly about Crazy Defense Heroes. It's a tower defense game slash play to earn DApp. It's developed by everyone's well-known Animonica Brands. Got a bit of a tongue twister there. So yeah, it was developed by Animonica Brands and also climbed the game's rankings. It's the second most played Polygon game, and it's doubled its player base from 2021 with almost 170,000 unique active wallets registered in January.
Yeah.
Uh,
s- Yeah, sorry, go on.
no, I was that. It's just last thing that I wanted to mention that Polygon is really making a splash. The current situation exemplifies the boost that's curated by the blockchain, and games are essentially giving rise to an entire blockchain. Established gaming dApps like, as previously mentioned, the Splinterlands, Axie Infinity, and Wax Games single-handedly sustain their own networks by engaging the
Mhm.
audience. At the same time, we see an incursion of new gaming dApps that are solidifying the outlook of the scalable solutions that we have, like Polygon, Harmony, and also Immutable. So games play uh, an extremely vital role in how different chains are evolving, and I think they are, because of their inherently interactive nature, they are driving the key interactivity on the blockchains in and of themselves.
Okay, so let's recap. So games, you said that contribute to around 52% of the industry use, right?
Yeah.
Okay, so that's more than half. So more than half of the use is coming from blockchain games, which is very good. And one of the most important metrics, most relevant metrics that measure the game's performance is how well they retain their users. And as you mentioned, Boris, the top five blockchain games are consistently retaining their users. Splinterlands has been the most played game, I think, since October or November, probably. Alien Worlds, and well, Axie Infinity. There's no introduction needed for Axie Infinity, and Farmers World and Upland are also there at the top. So what we are seeing is that blockchain games are successfully retaining their audience, which will be very important in the search of mass adoption. And later you mentioned about well, just one note before we jump in. Um, you mentioned that Axie Infinity had around 100,000 unique active wallets on average per day, and Splinterlands 300,000. So
Mm-hmm.
I just want to make a quick note here that these are on-chain metrics, right? Unique active wallets, which is different because Axie Infinity is the most played game by far because around 3 million players connect to Axie Infinity daily. However, we only see 100,000 unique active wallets, which means that players go into Axie Infinity platform and interact with a contract. But that doesn't mean that they are not playing the game. It's that we are just measuring on-chain activity, and that's why Axie Infinity is ranked third on our list. But actually, it's the most played game. Just a quick note.
Oh,
And another,
thank you very much for
yeah,
pointing that out. Yeah.
yeah. And you mentioned scalable solutions like Harmony, Polygon, and Immutable X. these are going to be very important to blockchain games going forward. Immutable X is going to become one of the most strongest players in terms of blockchain games. And what we saw in Polygon, Polygon increased its use basically by 100%, 80% from month over month from what we saw in December. Polygon basically doubled its activity. And most of it came from certain blockchain games. You mentioned Sunflower Farmers, which is getting people good gains, and Crazy Defense Heroes, which is a tower defense, as you mentioned. So all in all, Polygon is getting a very complete game ecosystem. It also has a mobile game called Arc 8, which is yeah, I mean you can play it if you're waiting in the line or if you're taking the sub or commuting to anywhere. I mean, you are seeing how these games are evolving, and you mentioned also Animoca Brands being part of this Polygon ecosystem. Animoca Brands is a very important player in the game space, so keep an eye on what Animoca Brands do. Perfect. And last thing, last important thing that I want to mention that happened in January is the launch of the RON token. The RON token is the governance token of Ronin, which, as you know, is the side chain where Axie Infinity runs. So finally, after 90 days of farming the token, we finally see it live, and it is just another proof of how strong and how important and complete the running sidechain is becoming. It's not only the small scalable solution where Axie Infinity runs. No. It has already its own DeFi suite with Katana. It has its own governance token with Ron. So keep an eye on this. Keep an eye on this. Perfect. So I think we covered pretty all that we need to discuss, and
the big three.
exactly the big three. And now it's time to ask our audience whether they have any question or concern that you would like to share with us. Please don't be shy and feel free to ask. We are here to clarify your questions and yeah.
Well, while people are thinking of the questions, do you mind if I ask you a question? Because I'm honestly kind of baffled by what's happening in LuxRare. By even though you explained it in a very big detail, that essentially wash trading is a self-serving mechanism for people who are artificially elevating the price of their NFTs. But what will happen to, like, by your subjective opinion, what will happen to those NFTs that are sold on LuxRare in the long run? I mean, for example, just taking a superficial glance, we have one of the most sold items on LuxRare, which is Meebit, that sold for 50.5 million. I mean, who has just that crazy money lying around? I mean, I understand when you do something like that for a real asset, like, a piece of real estate or a piece of jewelry or whatnot, you inflate the price and then you sell it to somebody, or you use it as a collateral for a loan, what have you. Like, what will you do with a Meebit that's worth 50.5 million, especially when it's absolutely verifiable that the price is artificially elevated? What does the person stand to gain from that?
I mean, first of all, I want to be friends with a person that has 150 million sitting on his wallet. But no. To answer, I mean, there are a lot of ways how to, let's say, hack it. I mean, either you're a whale and have, 150 million in ETH sitting on your wallet, but there are also other ways. Like you can borrow from a lending protocol with a high leverage, right? So in this way, you can maybe you can borrow on a collateral, sorry, on a leverage of 20x, which is very very risky, but you can get your money and it will be fast because you're trading with yourself. So maybe you can do it in 10 minutes. Another way is to do a flash loan, which is another feature of DeFi. You can do a flash loan, borrow yourself 150 million, um, purchase trade the NFT, and then return the flash loan in the same transaction. It requires, more more knowledge of how to do this in a programmatic way, but it can be done. So yeah, there are a few ways to do this. And again, why are people doing this? Because of the incentives. Because
Mm-hmm.
by trading high quantities, you are eligible to earn more looks, right? And looks is shaping out to be. I mean, for a while. I mean, I don't think looks rare is going away anytime soon. So yeah, and wash trading, I'm not sure. I mean, all the collections that have a 0% royalty fee are being targeted for this type of activity: the Mibits, the Terraforms, the CryptoFunks, the dot dot dot.
Mm-hmm.
So and projects are also starting to react to this. We saw which project? Loot for Adventurers raised the royalty fee from 0 to 2.5 to start avoiding this type of activity in their project. So we're seeing how projects are responding, and if more people start to use the platform, like more organic trades are happening, at some point it's going to stop being profitable for these wash traders because it's going to be a risk. They're going to risk that their rewards are basically washed away by all the trades happening on the platform. So if adoption hits well, if LuxRare gets at least 10 to 15% of the activity that OpenSea does, maybe
Mm-hmm.
we are going to see a decrease in LuxRare activity and wash trading activity at all.
But just to wrap that up, do you think it's a possibility then that since some collections have no royalty fees, do you think that's going to push other collections in the future to install royalty fees? And for the collections that are currently getting, well, for the lack of a better word, exploited like this, then do you think that taints them in general, that people would understand that these collections are essentially just getting manipulated?
I mean, we're going to see collections that don't do anything. Probably small collections like Terraforms and dot dot dot
Mm-hmm.
are benefiting from getting this exposure to the people out there. Okay, this collection is being traded a lot. Why? So it gains interest. It acts as a marketing trick. But also on the other hand, you see established projects like Loot, which is basically managed by the community, and seeing how their community reacted. Okay, we don't want to be part of this. We're going to raise our royalty fees to avoid this type of activity.
Mm-hmm.
At what extent? I mean, it's difficult to know, but yeah, I see our good friend Ian here. What up?
Hey guys, I'm just sitting here listening and just had a thought, so I thought I'd throw it at you and let you guys debate it, basically. Just to talk about what you guys are talking about, the wash trading.
Yeah.
I don't think that the person who's doing the trading like that is that bothered about the integrity of their NFT. That's what I started thinking about, and then that led me on to, what do you guys think about this? That those NFTs that have been traded back and forth in such a way, is there a chance they may become dirty NFTs, and that their metadata could be marked as such, and that newbies, people not familiar with NFTs, could then accidentally buy that NFT, only to later find out it's been sort of back and forth so much that it's actually affected its value? What do you guys think?
Well, first of all, it's a very good point, but I'm just thinking of from which way, because there's so many places that I want to tackle this question. All right, so just directly on. Yeah, first of all, let's cut through it, brute force. Let's say take Meebits for example. I'd like to find somebody who has 15,000 worth of ETH lying around just to buy a Meebit that's been wash traded, or any other collection. I mean, surely I understand that that may affect smaller valued collections, but when collections are getting exploited that way and the prices are growing astronomically, people will find out that generally they don't have that much money to start buying them. I mean, since if you can exploit something, people would push it to the absolute limit, which would then see the prices appreciating above the normal value, of other collections, and then we'll see the prices grow. So I think if
that's a good point. Well, let's theoretically say that after the trading has happened, the value of the NFT can be deflated back down to its actual value. So all this trading takes place, some time goes by, now it's back at its relative floor price. I kind of think in that situation, rather than somebody, and again, just to counter what you said, is somebody, we're talking about people having money, people getting into NFTs. There's people out there like Justin Bieber, like Eva Longoria. Most of them are using MoonPay. Some of them are not. They might ape in, like Justin did, paid 1.3 mil. It wasn't worth that much, was it? So
no,
you can say that people haven't got the money and 15,000, but they have, clearly. Look at the volume we just posted. Like, look at our report from this month. So yeah, not to debate it too much, but yeah.
Oh, it depends who. Celebrities, of course, have that kind of money, but then you could also questions like, well, that trade with Justin Bieber is like, was it an organic trade? Did he just want to flex on people with, hey, look how much money I got? So
yeah,
that's a high-profile trade, and you can speculate it to your heart's content. But then when we're seeing, well, we can see somebody who's not as exposed, some wallet number 0x something or other that's not exposed, and then they buy something. You could say, well, who is that person? Why did they buy it? Is it perhaps a malicious trade, or are they just participating? Like, it will be very hard to find a no-name account that's involved in that kind of heavy transaction. At least I'd like to think so, that average people, even the ones who are heavily involved into NFTs, especially the ones who are heavily involved in NFTs, they'll be aware that there's some manipulation going on, and they wouldn't want to touch something that's been, well, manipulated in such a way. Even if the price goes down in the future, it still has that, like, as I said, if you're a constant trader and you're in the loop, then you wouldn't want to touch them.
Yeah, of course, you're going to look at the trading data. You're going to look at it. You're going to use your intelligence there. But there are people that wouldn't. They come along, they buy it. So just to go back to the other point about it being a dirty NFT, do you understand what I mean by that? Like,
yeah.
That in the future they could be labeled as such, and then you think that's something that could happen? Should it?
Yeah,
happen?
I mean, well, that's a very good point, and I think because crypto markets are they're deregulated, and it's essentially a free fall. I think there should be a market solving mechanism by people. Essentially, I wouldn't say that we should malign people, but I think it should be brought to people's attention, wherein whether it's I'm not calling that LooksRare or OpenSea should do that, but maybe an independent information system or somewhere that can signify, hey, or another database or whatnot, or a website that does this, where essentially they say,
like DappRadar, maybe, like possibly could do something like that.
Well, hint, hint, wink, wink. Could signify that, hey, there's been this, for example, this collection has a history of potentially very strong artificial trading, and they could signify that this what happened, and if you are deciding to invest in this collection, be aware that it can be prone to being manipulated in the future. Invest in your own risk. So I think there should be a mechanism that buyer beware, this is what you're investing in.
I don't know.
You reckon,
I see it like, could you buy a Picasso from Pablo Escobar collections? That's the same case. I see it.
That's kind of right. Yeah, would you buy a piece of art with blood on it, kind of thing?
Well, not to that extreme, but yeah, I mean, I'm going to use a MiBit in the metaverse in Decentraland in 2 years from now, and I don't think the metadata, if it was wash traded 2,000 times, it's going to change. So nobody in the end will know that I'm wearing MiBit that was wash traded 10,000 times. So I don't see it necessarily, and also because, I mean, of course, there are projects reacting like Loot, and actually, you were the one that told me, yeah, look what Loot did. But I don't see it as a negative thing necessarily. Like, yeah, you have the right to react, but also you have the right to not react. If your collection is being traded a lot, it gets you more exposure. I don't see it necessarily as a negative thing. Although, of course, it's not ideal.
Yeah.
I don't know. I don't think it would affect the price of an NFT, especially.
No. It has benefits for both parties, doesn't it? So it's a hard one to call, and it's not
Yeah,
our place to say whether it's
it's
right or wrong as such. So nice one, guys. So
it's
just a thought that came into my head, so I thought I'd throw it at you.
oh,
Good,
Yeah,
thanks
good
thank
for the
you.
answers.
interaction.
Yeah.
Yeah, actually we've got a question from the audience from Tobas that Cornelia has pointed out.
Mhm.
Question: I am very new to this NFT. In the future, is it true that some NFTs can be used in games as characters, which can later involve buying and selling of this character?
Well, I would say, but that's kind of the point. I mean, we've covered plenty of collections that are going in that route. I mean, just in the past, I've covered the um, C-01 official. We had Clonex who are aiming the same thing. We had Hate Beast. We just honestly every collection that's creating not just NFTs but wants to integrate them into the metaverse. I guess that's kind of the point, that you will have your own character, you'll own the character, and then you can interact with that character going forward. I mean, whether it be Sandbox, Decentraland, or maybe perhaps a completely new project in the future.
Yeah, and also one very important thing that you actually mentioned, Boris, is the intersection between games and NFTs. Blockchain-based games, all the items that blockchain-based games have are actually NFTs, and this is a very important paradigm shift from what we know and what we are used to in traditional gaming industry. In the traditional gaming industry, and I'm going to put the example of Fortnite. If I buy a sniper rifle or a wearable in Fortnite, I cannot use it in any other game, and I cannot. As far as I know, I know there is a marketplace, but I don't think I can resell it. So in fact, in reality, you don't fully own the asset. I mean, you buy it to use it on the game, but that's it. The paradigm shift that blockchain games offer is that you actually own the assets, the NFT assets. You are owner to those, and you can do whatever you want with them. If I buy, I don't know, a wearable in Blancos, I can sell it on the marketplace. If I buy any Gala box NFT, I can then trade it in not only OpenSea but a myriad of Ethereum marketplaces. And at some point, hopefully, we'll see the blockchain game space mature and become an interoperable space where my avatars that I can use in the Decentraland or any other platform, I will be able to use it in other space. So we will get to that point hopefully, and that's the main difference between the blockchain game industry and the traditional game space, right?
So,
With blockchain, you really provide ownership of the assets to people.
so if I understand you correctly, then we're essentially gonna move towards the singularity where various chains have this oh sorry, the hard to
Interoperable.
pronounce, interoperability with each other. So if I buy an asset, I don't know, for I know Ethereum, and then maybe there's a game on Polygon that I essentially, because there'll be bridges and other technological solutions, I can transfer my asset to another game and then essentially use it there.
I mean, that's the ideal state. Of course, this requires a lot of cooperation between projects. But yeah, I mean, you can bridge your assets, and we see it with Axie. Axie is a perfect example. You can bridge your Axies Ethereum item in one game and use it in another. So again, this requires a lot of cooperation and support from development teams, because sticking to the shooter games, because it's easy to explain. A rifle that does 100 damage in game A, how do I program it to also do 100 damage in game B? But in game B, 100 damage will kill me with one shot. So that's the kind of logic, that's the kind of challenge that it's present, and it's going to be, yeah, quite an obstacle. But we'll get interoperability in the sense of, yeah, I can wear clothes in the sandbox, and I will use my same clothes in Decentraland, and I hopefully will use my same clothes in engine. So that's the kind of interoperability that we are going to see at that level, at
No,
least in the
that's
short term.
yeah. Well, that's a hell of a lot more than we get into games now. Like I understand,
Exactly.
yeah, no, I understand what you're going, but even still, like I'm an avid gamer myself, and oh god, I probably spend far too much money on the Call of Duty Modern Warfare, because they did very good job there making all the assets. Like I love all the outfits I bought, but now I can't do anything with them. So I would
Yeah.
love for them to be ported to other games. Um,
And
finishing that, yeah. Sorry, go on.
I mean, close, because we have a last question from the audience that we will answer. But yeah, close your thought.
No. As I said, my thoughts done. I wanted to also move to the question from Iman, I believe.
Yeah.
What do you think is the future of NFTs?
No, I mean, I will let you answer first, and then I will
Whew.
give my opinion.
And my subjective opinion is that NFTs, the more they're going to become ubiquitous, they're essentially going to reach, after a certain point, a critical mass. So they started off slowly, a little bit, were in 2017 with CryptoPunks. And yes, currently, so far, they're only used to store pictures. But as far as NFTs, just the actual token themselves, we are going to go in the future, and they'll be used for other things. They're verifying contracts, verifying, like, and we're slowly seeing those suggestions being floated out now as potentially storing your credentials online, storing your medical history online, and allowing your data to be used. Uh, I don't know. For example, if you
Yeah.
want to make sure that, hey, I earned this degree, then and this degree cannot be lost and it's there forever on the blockchain, this will be my NFT. This will be your digital fingerprint, whether it be for gaining access to whatnot, to
Yeah.
tickets of online
Yeah.
concerts that you buy online that you want to then display later for yourself, whether it be verifying your identity like a digital passport, what have you. Like
Yeah.
the
Digital
imagination,
identity.
yeah, the your imagination is honestly the limit, because once you understand that it's
Yeah.
essentially a unit, like a token that can verify your own anything on any chain, you can use it anywhere. Like and I hate to use a somber example, but we see this idea already being floated in China. For example, the idea of blockchain, and they invested a lot into researching blockchain in its industry, and it's something that they're already using for their social credit system. And I hate, as I said, please don't take this in such a negative, but this is one
Oh,
use of the system. You can use it for something a lot more positive than a social credit system in that regard. But the idea is that you can use it to verify your particular identity or verify your ownership of something else. And perhaps in the future, we can use it for, I don't know, opening your cars, getting access to your house, or
exactly.
whatnot.
Yeah. Yeah. Oh my God, sky is the limit in my opinion. I mean, the potential of NFTs is just impressive. And I think you mentioned two key things: digital identity and ownership. One, NFTs probably will become our digital identity once the metaverse really kicks in. Why? Because we are going to display ourselves as avatars, and these avatars are going to be NFTs. Also, I think you mentioned diplomas, certificates, important papers. You can tokenize everything, basically your house, your car, everything. Everything you can do it on a token item, a digital item, and it will be an NFT. Some use cases will be embedded into business, but I think the most interesting use cases we will see in our daily lives. For example, music. I think this is going to be an important year for music and NFTs. I think in this year we're going to see the first important progress in that regard. We are going to see also tickets being provided as in the form of NFTs. In this way, you reduce the black market. You avoid any issue. I mean, yeah, all of that, and we are already seeing that. The NFL, which is the American Football League in the United States, is already delivering NFTs. The Super Bowl tickets are also, well, they deliver you the physical ticket, but you can already access the game with using your NFT ticket. So we're already seeing this implementation. And these are just two examples. You mentioned how can I unlock my house using NFTs? And I saw that video on Twitter last week, how a person gets near a lock and using a QR code, which is an NFT, unlocks his house. And we are going to see it on cars. And we are going to see it on many, many things. So, I mean, yeah, in my perspective, the sky is the limit for the use cases of NFTs.
Wonderful. Do I have time for one more question? Because we've got a user who wants to speak.
Yeah.
All right, come right up, Big Baldy.
All right, you
There we
got
go.
me?
Yep, you're online.
I am wondering about mutable attributes, and right now, I mean, I don't know how to write them. I'm wondering if there's any projects coming up that makes that easier.
What would you mean by mutable attributes?
Yeah.
Yeah, could you specify?
Well, things that change, like for games and stuff. You know, right now we see Atomic Hub where you can make an NFT, but all the attributes are static, and you can't. Once it's made, nothing changes. But that's not how it works for games.
Yeah. I mean, we already see some examples in the collectibles. I cannot remember the exact name of this, but there is one project which is a generative art project, which basically each time you upload the page, it changes the form, and since it's stored on chain, I think it's already changing the metadata. Sorry, so I cannot remember the precise name of the project, but I think it's not difficult to achieve. It's something that it's been done already in the space. But yeah, I mean, as you said, it's going to be interesting to see which blockchain games adopt this.
Yeah, I just see more adoption to changeable attributes once it becomes
And there
able to be
NF
done without
yeah.
coding.
I remember another one. It's on the Eternity chain, which is a marketplace with different sports and music NFTs. There is one, Dak Prescott, who is the quarterback for the Dallas Cowboys. It launched an NFT at the beginning of last season, and depending on the performance of his game, he could turn into a freezing cold if the game was bad. He was normal if he played regularly, and then he was on fire and like a true cowboy, like if he had an amazing game. So we're seeing these type of examples already implemented in the space. So yeah, definitely we will be seeing more of that in the future.
Yeah, well, we already see the changeable attributes. I just am hoping to see a more automated way to do it, or not automated, but no code way to do it.
Yeah, I think also it's going to depend a lot on the technical infrastructure of each blockchain, the programmatical flexibility that each programming language allow to its smart contract. I'm not familiar, of course, with Wax, so I don't know how that work. But I think, for example, in using Solidity, it's achievable. But yeah, it's going to be interesting.
Cool, man. Thank you.
All right,
No
no
worries. Thank you
worries.
for the question. Cool. So, yeah, unfortunately, time has run out. I want to give a big thanks to all of you for your valuable questions and for being active in our community. And of course, I want to thank you, Boris, as always, for your valuable insights. Do you have any closing thoughts?
Personally, always excited to be here. Thank you much for inviting me for the third week in a row. I see we're actually gathering a lot more people with every coming week. Today, I think we had our record and this year at 102 people. So I hope that the longer we keep doing this, the more people can keep joining, and I hope we can grow this in the near future. I love doing these. These are essentially, and especially the input from the community is always great.
Yeah, it's very nice to see the community growing, getting more engaged, and yeah, I mean, definitely we will see again each other on February in this space. And yeah, I mean, remember each week at the same time, market movers on Discord discussing different crypto topics, and the DappRadar meet sessions where Ian talks down with relevant projects in the industry in his AMA weekly events. And also don't forget to subscribe to our newsletter and social media channels, Twitter, Discord, and YouTube. And yeah, I mean, that's all for today. Thanks, everyone. Have an amazing night and an amazing weekend. And yeah, see you next time.
Yeah.
Bye-bye.
See you. All the best.
Bye.